Hey guys. I've been in wealth management for 6+ years. I spent just over 6 years under the Northwestern Mutual umbrella running my own practice. And then more recently in May, I decided to launch an independent investment firm and financial planning firm solely for business owners. So that's where I'm at. I really focus on that, essentially taking a business owner from startup to exit and then help them transition beyond, whether it's buying new businesses or just managing the wealth they accumulated from that exit. Honestly, I just stumbled into it and I knew I had an entrepreneurial mindset at a very young age, but I also was fascinated with economics, finance. So to be able to put two of those together, at a very young age, I guess I got lucky, right? Stumbled in the opportunity, but I ran with it. And the best part of all this is at that age, I was still able to create my own schedule, be an entrepreneur. And then here we are today where I'm just taking it a step further.
What is it about wealth planning or financial planning that there's like a barrier there for folks? What do you think that barrier is?
This is a pretty deep explanation. I'm going to kind of parse this as I go here, but it really starts in the financial services industry. So one, there's a massive shortage. In the next 10 years, I believe we're losing 40% of all financial advisors due to retirement, essentially. So there's that. And then the younger people that come in, there's such a high turnover because it's so hard, right? When you have these young men or women go into the industry and a lot of it's commission based and they can't really break into like doing what I'm doing, like a fee only practice because they need more experience. So it's this awkward stage and very few people get through it. So what I'm getting to and why doesn't everyone have a CPA? You have all these high earning people and they don't have a CPA or attorney or a team. Well, a lot of it's because the really good people that they need aren't taking on any more clients, or there's just this awkward part where they might not, or it might be too expensive for the stage that they're at. But at the same time, they don't really want to work with the person that's 2 years in or a year in. So that's the thing. And then also, and I help a lot of clients with this. And so I might not even get paid for a while, but essentially I recognize, okay, you don't have an attorney, a business attorney, or an estate planning attorney or a CPA. Let's build the team around you and get it going. And then everything starts clicking.
What are the 1, 2, 3 someone would need for like insurance or just financial planning in general?
It's a good question. I'd say one, a lot of this just takes education. And this is going to lead me into, I think this could be 1, 2, 3 is knowing your behavior, knowing your tendencies. You don't have to have like clearly defined goals, but having an idea of what your goals and your vision is. And then from there, depending on how much time you want to spend on educating yourself, right? You can figure out essentially what you need to invest in or where you need to place your money, or you consult with someone. But for me, like when you talk about behavior, right, you need to understand, educate yourself. Okay, I believe in like a cyclical economic environment where we go through business cycles, economic cycles, and how are we going to diversify what we need to do? Okay, risk management strategy. Yeah, get your groundwork with the insurance, whether it's property and casualty, business liability insurance, life insurance. If there's business partners, you'll probably need some sort of cross purchase plan or buy sell, something like that. The reason why it needs to be managed is because to make up and make it more attractive, the insurance companies have engineered these to add on all these bells and whistles. So if they're not being utilized correctly, it could create a problem, right? Especially if you have some down markets, things like that, the policy could get more expensive, but usually they just lower the cap rate. My point with that is, say you're putting a lot of money into this and you're not really paying attention to it and you're borrowing against it heavily because that's what the TikTok video told you to do. And all of a sudden you don't realize the market's kind of going down that the insurance is tied to, and then you essentially have a margin call on the insurance And if it lapses,
Mhm.
right, if for some reason that year you can't pay that massive premium, well, and you got it borrowed against, and you have a gain in the policy, you're going to have a hell of a tax liability.